Right, it's 2 p.m. Thanks, everyone. My name is Perry Sao. I'm the head of claims at Alpha Secure, and today we're joined by a esteemed panel of speakers. And I'll just go around the Zoom to let everyone introduce themselves first. Start with Jessica.
Hello. Thank you, Perry, for having us. I'm Jessica Eldridge, Senior Vice President, Practice Director, Lead for Cyber within Forensic Accounting at JS Health. I have over 21 years of forensic accounting experience, measuring financial damages for business interruption, extra expense, stock loss, fidelity, as well as other matters, including litigation support services, and I'm based in Rhode Island.
Thank you, Jess.
My name is my name is Dan Devine. I'm a senior vice president at Lowers Forensics International, based in New Jersey. I've been doing this for 25 plus years, even more than that, but I'm not going to admit that. And I've worked on cyber probably about 60%, 65% of my business in the last 5 or 6 years. I've also done a lot of fidelity work, obviously business interruption. We've done the fires and storms and stuff before the cyber incidents became very relevant, and the increase and the limits increased, with the need of forensic accountants. And we look forward to talking to you guys today, ladies and gentlemen.
Hi everyone, my name is Monica Perez. I live in Miami. I'm part of the Lowers Forensic International team. I'm a senior vice president, and I work the US and the Latin American market. I'm not going to say for how long I've been doing this.
Great. Thanks, everyone. So before we begin, I just wanted to go through a quick review of the agenda. With all of our webinar series, I wanted to remind our insurers and our brokers and our partners how they can get in touch with Alpha Secure. Just do a brief overview of incident response, just a little reminder to our insureds in case there is a claim and what that process looks like. And just a quick reminder of the key players of incident response. And then we'll get into the meat and potato of today's discussions, which is role of forensic accountants. And following our discussions, we will have a quick Q&A session. So essentially, how do you get in touch with Alpha Secure? If you have a claim, you can reach us at claims@alphasecure.com. If unfortunately you have some sort of event in an emergency on a Friday night or on the weekend, you can call the 1-844 number, the incident hotline. And for our enhanced policyholders who uses the Alpha Secure security software, you can contact our Security Operations Center, or SOC, for assistance with any pre-incident security alerts and proactive claims prevention. So this is just a quick overview of the incident response process. Once a client discovers an incident, they can reach out to Alpha Secure. And what we'll do is we'll reach out to a breach counsel, an incident response coordinator. They'll run a conflicts check to make sure their engagement with our insured doesn't run any conflicts. And then they'll set up a free scoping call with our insureds to basically gather information on the incident and provide recommendations. And once that happens, up to our insureds to decide whether they want to engage the breach counsel or not. And then the investigation begins. And as part of that, there's key players of incident response. You have your breach counsel, you have your forensic accountants, who we will talk to today, and notification and credit monitoring services if the scenario requires it, crisis communications if the scenario requires it, digital asset recovery, and digital forensic investigation to determine how an incident happened. So with the main topic of today, the role of forensic accountants, we'll go over understanding business interruption loss coverage. I'll provide a brief primer on that, and then we'll talk about quantifying cyber business interruption loss claims, common challenges in cyber business interruption claims, mitigation strategies, and risk management for cyber business interruption claims. I'm just going to stop sharing the slide real quick so our faces are a little bit larger on the screen. So basically, how we start this discussion is business interruption loss coverage, right? So understanding business interruption loss coverage under the cyber policy. What is business interruption loss coverage, and why is it crucial for businesses nowadays? And I think the second part of that question is pretty obvious. Most businesses utilize computer systems that are connected to the internet And if there's some sort of cyber event that impacts that system, it can cause disruption to the business and business operations. So business interruption loss coverage is coverage for income loss and extra expenses incurred by an organization resulting from a partial or complete interruption as a result of a security incident, a system failure, or a preventative shutdown. Now, income loss, most policies definition would mean the pre-tax net profit that the organization did not earn as a result of an event, and the net loss the organization incurred as a result of this event. And in addition to business interruption loss, there's also extra expense, which is basically reasonable and necessary expenses incurred as a result of a business interruption, expenses that you incurred to try to avoid the interruption, to try to keep your business going. So it's expenses in addition to the expenses that you would normally have to run a business. And so some of the triggers that would lead to a business interruption, as previously mentioned, security incident. Most often than not, when it comes to security incidents, we see ransomware events where a ransomware threat actor group has encrypted a company's computer systems. That could lead to business interruption. In addition to that, you have system failure. This is a situation where there is an unplanned interruption in the systems. Most of the time, this is not intentional. Think of it an outage. And another would be preventative shutdown. This is a situation where you might have a security incident, but in order for you to contain the event, you have to voluntarily shut down some of your system to make sure that the situation doesn't get worse. So those are some of the three triggers. And then, of course, you have what we call dependent business interruption loss, which is when a business that you work with is suffering some sort of security incident or system failure that impacts your business and then causes you to have an interruption in business. So with that said, let's talk about quantifying cyber business interruption loss. And so for my first question would be to Dan, what role do forensic accountants play in assessing cyber business interruption losses?
I mean, it's very important for us to communicate with the insured and get a better understanding of how they were impacted by the loss, because obviously, depending on if it's a dependent BI loss or direct physical loss or systems failure, the business may have been impacted many different ways. So what we'll do is after an introductory call, before the introductory call, we'll get a better understanding of what the insurer does. Are they a service industry? Are they a manufacturer? So we're going to usually come to the call with a lot of expertise. We'll go on their website if the website wasn't shut down too. But we'll work with them on quantifying the BI losses. We'll analyze financial records, transaction data, other relevant information for both direct and indirect costs that may affect the business operations. Our goal is to understand and quantify how the cyber event impacted the revenue and expenses of the affected business. The different components of a cyber BI loss, there's usually the loss revenue, increased or extra expenses, which are above and beyond normal, potentially mitigation costs. At times we're asked to look at the mitigation costs. We actually have brought in experts to look at even though we're Lauer's Forensics, I'm a forensic accountant only, the computer forensics are above my pay grade, so to speak. So we bring in experts to do that, or sometimes a carrier will do that on their own. And there will also be financial impacts like inefficiencies and extra overtime, because maybe a company had to do something manually. If they couldn't get access to their inventory records, and they had to do things manually, obviously, once they came back from the event, they could, to re-input everything into the systems. There's going to be extra expenses, whether they had to hire outside help or just some hourly labor people that they had to pay overtime. We would look at that. And as I mentioned earlier, sometimes we'll look at the mitigation costs that the insured incurred to shorten the downtime period. Again, that's something that we can quantify in dollars, but not defer to you regarding coverage. But overall, our critical role is helping to navigate the entire process with the insured and to work towards getting this to fruition at the end of the day.
Right. Yeah. One of the things that you reminded me of is the the number of variables that are involved with these type of matters. And I think, with business interruption, it doesn't get the level of attention that I think some of the other aspects of cyber claims does. And quite frankly, in my experience, business interruption is the biggest driver of loss, and it has the longest tail when it comes to cyber claims. Just kind of diving that into more of the calculation, Monica. So, how do you calculate, the financial impact of downtime caused by cyber incidents? It seems very complicated to me.
Yeah. No, this is a broad question, and we're very happy to be here talking about this today, sharing our experience, our knowledge, because we know how hard this is for the insured. But going back to your question, I would say that the first thing that we need to do to quantify the financial impact is to understand the business interruption loss coverage. Because as forensic accountants, we don't interpret the policy, but we'll ask you for guidance and help. And I do want to read the wording in your policy because we have questions later about it. So I think it's important. But we understand that business interruption loss includes the insurance entity's reasonable expected net profits, which will have been earned had the security incident, system failure, or preventative shutdown not occurred. Plus, continue normal operating expenses and payroll, but only to the extent that, number one, such continue normal operating expenses and payroll directly relates to that portion of the insurance entity's business operations interrupted by the incident. And number two, such continued normal operating expenses and payroll must necessarily continue during the period of restoration. So basically, we're looking here at two things. We're looking at the net profit, as you mentioned before, and we're looking at continuing expenses. So when we look at the profit and loss statement for any entity, we have revenue is going to be the first line, sales revenue. Then we have all the expenses, and then we're going to have net profit, net income. And this is just to simplify. There are too many other things in the profit and loss statement. But there is this idea that what it's covered is the loss of sales, loss of revenue. It's just the first line of the P&L. And it is very important to, as we mentioned, the policy covers net profit plus continuing expenses. And this is what we call the bottom-up approach. A similar one would be the top-down approach, in which we quantify the revenue loss and then we deduct all non-continuing expenses. So at the end, we should get the same result, but sometimes it's easier when we explain it from the top down. Right. So what's the first step? First of all, we need to quantify the revenues. How do we do that? Well, we can use many different methodologies, but the first question is, what type of business are we looking at? For how long was this business affected? Does the business have a seasonality? We could calculate averages, daily, weekly average. So based on the day of the week, we could do trends year over year. Was the business increasing sales? Was it decreasing sales? We could do regression analysis. So there are many methodologies, but again, it goes back to what type of business are we looking at? It's very important to really, really understand the business. And once we are able to project the revenue loss, then we're going to take a look at the expenses. Which expenses continue and which expenses did not. A very good example of an expense that does not continue is cost of goods sold. If we are talking about a retail, for example, if you don't sell a product, you don't incur that cost because you have the inventory. Another very good example, credit card processing fees. If you don't sell, you don't have to pay a credit card fee. So those are expenses that are automatically saved when you have a revenue. And then you have to understand them. But these are the two main things that we need to understand. What's your revenue, sales, loss, and then what happened with your expenses. Now, another portion that is very important is the extra expenses, as you mentioned before. And with the extra expenses, we have to look at reasonably unnecessary expenses incurred by the insured to minimize or avoid the interruption of the business operations that exceed those expenses the insured ordinarily will have incurred in the normal course of business. Again, this is very important. It's very important because sometimes when we look at claims, we have like salary employees being claimed under extra expense. But again, this was already included in the income loss. So it's important to understand what falls in each category so that we can separate them and present the claim in a better way. An extra expense will be if this is a business that, let's say that they never pay overtime, and
Right.
now they're paying overtime. That's an extra expense. Very easy to calculate. If there was extra expense before, we will calculate that amount that is above their normal extra expense. So I want to kind of summarize very quickly, but these are the things that we look at usually when. And another important thing is historical data. And it says in the policy, in order to project revenue, look at the historical data. What happened before the incident? Maybe 6 months, 12 months, 24 months. It depends on the type of business. We have had cases in which if it's a new business and we don't have historical data, we have to look at post-loss data.
Mm.
And that might tell us what was going to happen with the business, but for the incident.
Thank you. I mean, all of that really contributes to, it could contribute to the duration of a claim. And quite frankly, I think based on my experience, most insureds, they're not aware of any of this when they submit a claim. Usually they feel like, okay, here's my anticipated business income loss, please pay me. And so having that knowledge early on is extremely, extremely helpful. To that point, Jessica, what factors in your experience has impacted like the duration and the severity of a cyber business interruption claim?
No, and I agree what you said, Perry and Monica, regarding, just it's complicated. There's a lot of moving parts, but I think that regarding the duration of the business interruption and the extra expense, that initial discussion and making sure that you understand before you get into the calculation, what is the period of restoration? I think that that's one of the first discussions that need to be had, because just by looking at the financial figures and calculating, at the end of the day, there has to be a causal relationship to tie back to the cyber incident. So during that time frame, what's going to affect, it's going to be a lot of different factors. When were the systems restored? When were they back up? Was it a partial or a complete shutdown? Is this business able to make up, or was there a delay in sales? Is there an extended period? Is there reputational harm? So before we even get into the calculation, we need to make sure that we understand, as Dan mentioned earlier, the business, what actually took place. And so taking that information, determining what the period of restoration is for the business interruption and the extra expense will allow us to then calculate what the actual damages are.
Right.
But as I mentioned, this needs to be take place from the beginning, because we don't want to get down and say, just because there's 120 days or 180 days within the policy, that's what potentially the insurers are afforded in coverage if their systems were back up after a few weeks. And so those are areas where we want to have discussion with you, because we don't determine coverage. We seek, your expertise on that and the interpretation of the policy.
Yeah, that's a great point. Period of restoration, it could really help limit the sort of time range in terms of the information that you would need to help with the evaluation of coverage, not evaluation of forensic accounting loss. It's a lot of it is also dependent on how the claim is going, because and this is why there's such a long tail with respect to the business interruption loss component, because some of that information of when they were restored or fully restored, was it within the period of restoration, you won't get that information until several weeks possibly. And then that's when clients and insurers start thinking about their business income loss, which can then delay the reimbursement of the business interruption loss. So
100%. And I was going to add that just because these are criminals, these are cyber criminals, if you pay a payment or a ransom and you expect that cyber criminal to be honest and give you back that encryption key, to give you back your data, you might have delays because you're not getting all the information that you thought you were going to get back in order to properly calculate a business interruption claim. You might only get back, if we're looking at a 12-month pre-loss period, maybe there's 3 months that are missing there. And so that information will delay it. And so that's why it's important. And we'll talk about that, I think, further in the presentation regarding making sure that you are prepared prior to an incident and have the right resources in place in order to avoid any type of delays within the claim. But I agree. When we look at the business interruption, it's usually the last thing that gets the attention. And we're like, think of us from the beginning, have the discussion up front, because I think that will help the claims process all along.
100%. And I think that really dovetails to the next question to Dan. In your experiences, what are the biggest challenges that insureds face when navigating, a cyber business interruption loss claim? Like, what is the things that you see time and time again that has been a challenge for insureds?
Well, I mean, what are the complexities is, I've been working on business interruption laws for over 25 plus years, but unlike physical damages such as fire and flood, cyber incidents may be impacted in various ways, different systems, different data, different operations. I mean, and when they go down, not all the systems go down. So we really, sometimes insureds just lose email, but yet their operations are still going forward. So where is the financial impact? I know email is important, but there's usually workarounds. So there's also the tech, so unlike a fire where you have a definite period of restoration, the hotel burned down, it's back up and running. You start up, you have a ramp up period, and the loss is over. It's difficult, when you have complex systems. I mean, I had a hospital loss that the IT report was like 182 pages. And I'm like, there's so many different systems. You don't just flip a switch, whether you buy the ransom, the encryption key, or you back up from the restore from backups. You don't just flip a switch like you do with a light switch. The systems take a while to come back up and running, and there's usually a ramp up period. So, it's a lot more difficult. And that's why you need to have a back and forth discussions with the insured to see how they were impacted. I mean, systems, if it's a customer's only up 80%, I mean, that last 20% may be the portion of it that really generates where the revenue loss is. There's also the technical complexities of whether it be a malware, a loss, or a data breach, or like you mentioned before, a DBI loss, a dependent business losses. So those are all, and a lot of times they have different limits depending on what type of breach occurs. Different carriers, I haven't gotten into the details of yours, but obviously, if it's a direct breach, usually the limits are a little bit higher than if it was a dependent breach. It's the insured really needs to coordinate and have their service providers and vendors in place before the loss actually occurs. I mean, and then down the road, there's a lot of times that people lose contracts, and the contracts are lost because of the breach. I mean, it's kind of shorthand or short-sighted for customers to cancel their relationships with someone because of a breach, because it's not if but when. I know we've been saying this for a number of years, but unfortunately it's going to happen. You can have the best security protocols in the world, and you have that one person that clicks on a link, and it can go down the drain very quickly. And then again, so a lot of times those canceled contracts extend way beyond the period of restoration or the period of recovery, and there's a reputation or brand damage. That's usually another endorsement that carriers have, but then we have to take a look at, you need to show us that a canceled contract was due to this breach event. Too many times have we've gotten claims in for a 5-year time period, which is beyond the period of restoration, that the relationship was on its last legs. This may have been a straw that broke the camel's back. But then again, we just need confirmation that any financial losses can be tied back to the ransomware or cyber event. And that's something that, those take a little bit more, a deeper dive. So that's why having a relationship with the insurer in the beginning, even scheduling bi-monthly calls, I mean, just to make sure that everybody manages everyone else's expectations, and we push the ball towards the goal. I mean, at the end of the day, we want to get this resolved, and I think open communications will help that process immensely.
Yeah, I think that's a great point. Yeah.
Perry, I was going to ask, how often do you see the insureds actually, reach out and ask, what type of documentation do we typically need for a business interruption? Or, is there any resources so that we can have tabletop discussions and plan? Like, do you see that often, or does that happen?
No, it doesn't happen very often, if at all. I've never experienced a situation where insurer proactively reaches out to ask, like, what are the next steps? If this happens, what should I be thinking about? And that brings up the thought that most insurers are focused on incident response plans, right? And business continuity plans, but they never think about the additional component of insurance as part of that plan and what that means in the process of that. And with that, the proof of loss, like what information they need to be aware of to address situations like business interruption loss. So personally, I think that as part of an incident response plan or business continuity plan, that those factors should be incorporated in those plans. So to your point, Jess, never. It's always an afterthought and something they'll figure out later. And I've recently just had a call with a client that is dealing with an incident, and I've mentioned this, and they're like, "Yeah, we'll talk about this later down the road." I'm like, "Okay, I know you got a lot going on, but this is something that needs to be on the top of your mind, in addition to everything else that's happening." So yeah, it's just more education, more communication. And I think that dovetails to the question I have for Monica is, with that in mind, how, in your experience, can businesses prepare for a smoother claims process? Because I think that's going to help the relationship between insureds and insurers, and also whoever their stakeholders are.
Right, and that's a very good question. And I would say the best advice for me is just to go back into your policy and have a clear understanding of the wording and how it applies to each scenario. Because in that way, the business will be better prepared to provide the information necessary to quantify the loss. And this is something that we see every day. Many times we receive a claim and we see that the insurer has spent a lot of time and resources calculating a loss, putting together a claim that does not align with the policy wording. And sometimes it's very frustrating for them because we have to go back and say, but this is not covered this way. We cannot, and then we have to ask for, very detailed information. And I think we're going to be covering that probably later, but that's why it's so important to understand what it's covered. And even before preparing a claim, putting together a claim, maybe having a call with a forensic accountant or with someone who can guide them and say, this is what you should be calculating, quantify this, not that. And a very good example, I don't know if we have anyone from the service industry here with us today, but for example, as forensic accountants or architects, engineers, lawyers, usually we bill per hour, right? So that's how our business earns revenue. We bill per hour. If we have a cyber incident, what is our loss going to be? It's a loss of billable hours. It depends. If we are down for 3 days, we cannot access our server, our computers, our clients' data. So we don't have access. We cannot bill those hours, right? So our loss is going to be based on that. Many times we get claims from insurance, from services company, and their claim is based on loss of collections, right? It doesn't work like that. You cannot compare January 2021 and January 2022 and say, compare those two and say, I should have collected these amounts and I didn't. Because collections, you can go back and collect later. Once you have your system, you can reach out to your clients and you can collect that. Usually what we collect, it's something that we worked on many months ago. So, and it's just a way to show the perspective. We have to focus on how is our revenue earned. And that's what it's going to be used to quantify our loss.
Right.
So it's very important to understand that. And other like comments that I will have, for example, it's have an incident response plan, as you were mentioning before. Have a comprehensive incident report plan that basically outlines the steps. So we're going to do this first, then we're going to do the other thing. And it should include like procedures for containing the incident, notifying the people that should know about it, preserving evidence. That's really important for us. As forensic accountants, we're going to be asking for documents. And it's important to know that we always prioritize this because we know how hard cyber incidents are for companies. We know that there is going to be a huge cash flow issue, and we really want to be able to help. However, in order to quantify the loss, we need to ask for financial information so that we can go back and issue a report telling you we have quantified this loss for them, and you can go ahead and pay. So we really want to help, but we need the financial information, and it's important for the insured to understand why we're asking that. What is it that they need to have ready for us? And I would say, like, track expenses. That's very important. All of the expenses, keep detailed records of expenses incurred as a result of the cyber incident. And then those can be submitted to you or to us for a review. But, it's going, again, if I can give only one advice is read the policy, understand, make sure that you know exactly what it's covered, and have a plan ready. Who is going to be taking care of this when this happens? Like my accounting department, trade them. Have your accounting department ready. And that's going to make the whole process smoother and quickly.
Right. No, 100%. I think knowing what you're getting yourself into if something bad happens is so key. I think one of the things that I always recommend to insurers is that don't just focus on the insuring agreements of a policy and the limits, the dollar amount. Like, look into the conditions of the policy, because that's going to really impact how coverage is playing out. And so involving stakeholders within a company that might be part of the proof of loss process in obtaining that information to be provided to the insurance companies is essential, and that should absolutely be a part of the incident response process. So yeah, that's great.
And I was going to just add, does the insured truly understand, what coverage they need for business interruption if they haven't done like tabletops or like put a calculation together if they were down for a day, a week, a month, what would those losses be? And so it's not, a surprise once an incident does take place, and if there unfortunately might not be enough limits or coverage.
Yeah. 100%. In the tabletop exercises that I personally participated in, it always kind of ends, before the business interruption loss calculation starts. It's usually like, oh, okay, guys, we saw what we needed to do. Here are like the issues, but they never think about the long tail of a claim, which is the business interruption aspect. So that should.
And even the BI worksheets that I see are not filled out correctly. I mean, sometimes you need a little bit of education to teach them. I mean, if you're down 3 months, what's your worst case scenario? If you're down 6 months, what's your worst case scenario? I mean, if you're down 6 months, your business continuity plan is probably going to go down the drain, because being closed for 6 months, you might as well close your doors. So you don't hope that doesn't happen with all the different protocols you put in place to hopefully mitigate the time period that you would be down and had a breach occurred.
Yeah.
And I was going to add something Monica mentioned as well, is even the expenses, tracking those. One of the things that we always want to do is track any of the incident related expenses separately. So when we're looking at your financials, what actually occurred, and we know what is incident related. So we always say set up a separate account and track those separately so that we, it's cleaner when we're doing our analysis.
Right. Yeah. And that's going to really contribute to resolving the claim and getting reimbursed from the carriers. So this question is to you, Jess. So what are the misconceptions about cyber business interruption coverage and the role that forensic accountants that need clarification in your experience?
I don't know, but I will answer that. But I will say, don't forget about us, like involve us early. And so hopefully that tail end of extending the business interruption and the extra expense portion, we can have discussions with the CFOs, the controller, whoever needs to be in place is really important. But I would say the biggest misconception is our role in determining, potentially, let's say the period of restoration. We don't determine coverage. And so just because there's a change in revenue, if we're looking at it and say, here's a difference from one month to the other, so that must be our loss. As I mentioned earlier, there has to be a causal relation tying it back. It could be multiple things. Like if Monica mentioned, if it's professional services, if there are, let's say there's people who, timekeepers that left, or it's a hospital and there's increased doctors or less doctors, and might not necessarily be an incident related. We need to drill down to what that is. So the period of restoration, we defer that to you and make sure that we have an understanding. And we don't always get the technical report to know systems are back up at this time. And so those are, I will say that misconception as to our role. We look at what the change is in revenue, but then that needs to be tied back to the incident. But as I mentioned, the technical report as to when systems were back up, we don't receive that. I don't know if you get that all the time. When we're like, well, when were the systems restored? Because there might be various dates as to when systems come back up. And so we want to make sure if you ask us questions, that we can answer that. So I always say, help us help you so we can resolve the claim. Also, I would just say, we talked about determining coverage, but involve us early, and I think that it can help the process along. But I would say the biggest misconception is us determining the period of restoration.
Right. Yeah, no, absolutely. I think, this is a very open dialogue between insurance carriers, and the independent forensic accountants that are involved. All of these information is needed to help resolve a claim. And the idea is that forensic accountants, in my experience, is that they're there to be as objective as possible, but the insurance carrier has to set the conditions based on the policy language. To your point, the period of restoration, like that is very, very key. So, we have a period of restoration. It could be anywhere between 60, 90 to maybe even 365 days. But to your point earlier, that's the maximum limit, but the restoration could have occurred within like 3 weeks. So having that information and having that information available to the insurance carrier and to the forensic accountant is so key in actually just jump starting the discussion. So that's a really great point. So I just wanted to, continue this conversation about being proactive when it comes to dealing with business interruption laws and mitigation strategies and risk management from like a cyber business interruption laws perspective, things that risk managers and accountants and finance departments should think about. So this question to Dan, what steps can organizations take now to minimize the impact of cyber business interruption?
This question could probably take just an hour to go through by itself, but as a forensic accountant and been working on a few hundred of these losses, implementing a robust cybersecurity measures, invest in comprehensive cybersecurity, including firewalls, antivirus, intrusion detection systems is really important. As you had mentioned earlier, develop a business continuity plan, because creating that plan and following those procedures and doing walkthroughs, like establishing an incident response procedures, doing the walkthrough, similar like we did a walkthrough before we did this presentation to make sure we weren't stepping on each other's toes. Hopefully we've done a good job not doing that. But just having that, and not only just having a plan, but do the tabletop exercises, because like I mentioned earlier, unfortunately it's going to happen. It's going to be happening the most inopportune time. But the fact that you've already reached out to your vendors, you know who to call, to contact the carrier first, get the breach counsel involved, get the vendors involved, because that's going to help to mitigate the time period and to mitigate disruption in your business, impact to your customers, and the long term, continuity of your business. I mean, after the claim is over, you want to get back to where you were before the loss, or do even better. And the quicker you can recover from it, the more that would definitely happen. Back up your systems regularly, implement regular backups, and make sure you can access those backups. I've had losses that they had 8 different backup systems. They all got encrypted. Whoever put that together should be held liable for this loss more than the carrier. Train your employees. I mean, you could have the best, most robust cybersecurity system, but if you have someone that clicks on that link, it can all go down the drain very quickly. Monitor your systems, conduct regular risk assessments, when new people come in. Make sure those third-party relationships, make sure you have a point person to reach out to. And if it's a ransomware event, many FBI agents, when I've gone to some of these, have an FBI agent that's local, because sometimes, if monies go, if you end up making that payment, they can go track it down. Now, Bitcoin is not untraceable. They can go get back and get the money back from these bad actors. And, that's the only way to get them to stop what they're doing. But obviously the bad guys seem to be ahead of the good guys in a lot of cases, but we're catching up. Just stay informed, just know about the different schemes that are out there. There are different, the black cats and all the different, the different, people that are committing these malfeasance. Know what they're doing lately, because if they're not just doing it to you, they're doing it to hundreds of thousands of other companies. Unfortunately, I think AI is going to make that happen even more. Instead of just attacking 1 or 2 insurers, they can attack 10,000. If they get a hit rate of 2 or 3, they're better off than they were pre-loss. So, and just make sure your policy and procedures are up to date. And so, I mean, for the most part, reach out to your carrier. They're going to have even better ideas than I have. But that's just from working on a few hundred of these in the last few years, and just some ideas from a forensic accountant on the sidelines right now, Yeah.
And really further to that discussion, right? There has to be plans, and then practicing those plans and updating those plans. It's sort of a fluid process. It's not one of those things where you did it once or twice, you got it. Like, as threat actors evolve, insurers and organizations need to evolve as well. In terms of best practice, Monica, what basic best practices can insureds implement today, just so that they can manage business interruption losses better?
Right, and I think this goes back to everything that Dan was just saying, that I think all of that would apply here, definitely. But if I could say like 3 things, I would say, again, review and update insurance coverage. Just make sure that your policy that it adequately cover potential business interruption losses. Consider adding extensions for a specific risk if you don't have it, or increasing the coverage limits. That's really important. Sometimes businesses are growing very fast and they don't realize that the values insured are not the same ones anymore. The risk has increased. So, going back to the policy and keep it as updated as possible, that's a very good practice. Business continuity planning, like step by step. When this happens, how are we going to react to that? What are the steps we're going to take? And maintaining accurate books, because again, for us forensic accountants, even though we really want to help and get the quantification as soon as possible, it's impossible for us to do it if we don't have the records that we need. And I'm talking about daily sales, weekly sales, profit and loss payments, and many others. But I would say that those are the 3 main points that I would recommend just to manage business interruptions.
Yeah, the business continuity plan is one of those things that I think there's so much variables in there, and each business is very different. And in some of the matters that I've worked on, when an insured is down, they don't even really know what other alternative vendors they may be able to engage to keep their business going. And as a result, that kind of contributes to a greater loss. So as part of the continuity plan, it's like, what is your alternative means to continue your business, whether it's through a different service provider that you can utilize and whatnot. So
And
that's
it
that.
can even go
Okay.
down to alternative office locations. Nowadays most of us work from home, but if you have an office and people go to the office and something happens, so what are we going to be doing at that point? Do we have everything ready so that they can work from home or from somewhere else? All of these questions that if we can anticipate them and be ready, it's going to make everything easier.
Right. And I think we might have already covered this, but just for Jess, so what role does documentation? I think we could, beat the nail over and over again, but what is the role of documentation and how it plays in supporting cyber business interruption claims?
It's critical. I think, we've mentioned this a few times, but it's critical for the analysis. Without the documentation, we're not able to perform the analysis, and it's going to delay the claim. That's why it's really important to have backups, and not just backups that are current, that has the information that if an incident does take place, you have the data that you need. And understanding what types of documentation is needed. As you mentioned, industries are different. There's different documentation. If you're looking at manufacturing, there's production records. If you're looking at, let's say, a law firm, we're looking at timekeepers and billable hours. So, just understanding what is needed. So there's not a general one-size-fits-all document request list. It is by industry, but just using the resources that are out there, like Monica, Dan, and myself, to ask the questions. What is being asked? What type of documentation is needed? And I have found that the delay also happens when we as forensic accountants ask for information and we don't get that data. If we're asking for monthly or we're asking for dailies versus monthly, they think that that's not necessary to provide, or, why do you need that data? We're going to be asked questions, and we want to make sure that we put a package together that is all encompassing and we can understand what actually took place. So if just because we see a spike in revenue in the next month, what is that? Is that makeup, or was that because you hired new attorneys that have nothing to do with the loss? And so it actually helps the insured if we have the right information in order to calculate the loss. And even payroll, when we ask for payroll, we ask for detailed payroll, we might ask for, what was the scope of work being performed? And that's why it's important to have those discussions up front to say, look, you might not be presenting a claim right now. You might think you may have loss, but if we can have those initial discussions to say, look, keep track of your payroll. What is the employees working on? Because it might not necessarily be part of, let's say it's IT, be part of the business interruption, but it might be covered under a different bucket for some other, recovery efforts or data recovery. So that's why documentation is really important. It will hopefully shorten the delay period on the BI, but I think it's critical.
Yeah, no, that's a really good point. I've worked on a number of business interruption loss matters that have lasted over a year to maybe 2 years. And all of that was just trying to get documentation. And so, the purpose of, these educational webinars is that we want to make sure that, from an insurance carrier's perspective, that we're as transparent as possible. We understand our purchase insurance policy and has certain expectations. But there are conditions in the policy that carriers have to go by. And part of that is getting the appropriate documentation so we can assess the loss and adjust the loss according to the language of the policy. So really a cooperation from insureds and working with forensic accountants who are experts at this is going to be critical in making sure that our insureds get reimbursed for their loss as quickly as possible. So that's so critical. I mean, I think we're at a point where we have about 11 minutes left on the webinar, and I just want to open it up for some Q&As and see if we have any questions from the audience. And I'm going to share my screen. again so that everyone can see
Ask questions. We love questions.
the contact information for Jessica, Dan, and Monica.
But I want to add, just in case we have some question coming, going back to what Jessica said. Sometimes people believe that we ask for more information just to make the process tedious and longer, and it's not at all. If we are, you know your business better than us, and in order for us to really get the picture of what happened to your business, we need data, and the more data we have, the better the outcome is going to be, because we're going to be really grasp what happened to the business, how it was affected, and we're going to be projecting your loss. And usually we project losses in different, using different methodologies. So that's going to give us more resources to put the insurer back to where it's happening.
That is, I mean, that is a great point. Honestly, I think that the misconception is that insurance carriers want to delay a claim. If anything, no, we're incentivized to try to resolve a matter as efficiently as possible for customer service. And so the asks are never intended to be any form of delay. It's really necessary information for us to evaluate and understand the exposure, and so that we can reserve appropriately to make sure that we're setting aside enough money to make sure that we can efficiently pay the claim. And it's one of those things where there's sometimes misunderstandings can lead to contentious relationships with insureds, where if you just have an early discussion like and have educational sort of webinars like this, that can really kind of minimize those kind of issues. So.
We did have a question that came in through the Q&A, Perry.
Yep.
Answer that or provide that for the panel.
Would
Question
you-
is, how do you stay up to date with the latest developments in cyber threats and forensic techniques to ensure your investigations are effective?
From forensic investigation from forensic accountants, or forensic investigation from like a digital forensic investigator? But I could tell you in what I do in terms of trying to keep up to date from like handling cyber claims perspective. But we have resources, whether it's from our third-party service provider partners who provide threat intelligence. We also provide our insureds with free resources such as the eRisk Hub, which has tons of information regarding the various cyber threats that are out there. In terms of forensic accounting, I'll defer to our panelists to advise how they're keeping up to date in terms of forensic accounting.
I mean, for the most part, on the forensic accounting front, I mean, we'll look at we will look at trend analysis, forecasting, industry statistics, and things like that. But when it comes to the complexities of the cyber incident itself, we don't get involved in it. We just get involved in the financial impact. So, but just looking at even their forecast, our trending, industry data. I mean, we look at losses 2 or 3 different ways. I mean, I'll never just put one calculation and send it off to you or any other carrier. I want to look at it a few different ways. And if the numbers are pretty close, then I know I'm pretty much spot on, because we're trying to, we're not playing God. We're saying, but for this incident, what would have happened? And that's why we look at it a few different ways. We'll do year-on-year comparisons, week-on-week. I mean, there's a lot of different things. There's no direct, there are rules, AICPA guidelines, but there's no specific rule to say you have to do a service industry this way. You need to do a retail incident this way. You need to do a hospitality this way. It's basically based on, that's how I've earned this gray hair. You know, our experience, my experience has paid dividends, because I'm going to come to a loss and know a lot about that industry and be able to talk with the insured and make the entire process a much smoother, and hopefully get it resolved quicker. And that's why having the periodic phone calls, if you need calls every week, some insureds you need to hold their hand more than others, and someone, just want to put everything together and throw it to you as a package. We can work with that. Like I said, we get more with sugar than we do with fire. We're there as a resource. We can help the insured, hold their hand and say, okay, you maybe didn't look at this, or you maybe didn't look at that. Or if you added 2 and 2 and got 3, we're going to make that correction, because we're independent. Even though you may be paying us we're independent. We're there as an independent forensic accountants to come up with the right number.
Another question came in, thanks Dan for that, and clarifying, really the role of forensic accountants. Another question that came in is, understanding there are many critical components to making the process for claims as smooth as possible, is there a single component that could be considered the most important and crucial? And I hate to say it, reading the policy, understanding the policy.
Yeah, no,
I'm
go
sorry.
ahead. Go ahead, Monica.
I would say that if one thing, it's communication.
Mhm.
You know, if this is a long process, and we have to think about it. Like when we get in and when we get trained, sometimes it's difficult, it's hard, but step by step, we're gonna get through the end. We're gonna make it, but let's just communicate. Every time that we need to talk, let's have phone calls every week, bi-weekly, whatever it is. But that's my best advice.
Yeah.
I was going to echo exactly what Monica said, was
We think
communication.
alike.
Yeah, so we think alike here, and I think that obviously that is key to what is most important and critical. I think if you continue to communicate, have the initial discussion, follow up then with a request, and then, continue to follow up or set that expectation. Do we want to have calls weekly in the beginning to make sure, do we do it every 3 weeks or follow up monthly? At least there's an expectation and they understand that communication is working back and forth, and hopefully make the claims process go a lot smoother.
Because too many times there is no communication. All of a sudden you get a claim, and the insured thinks there's a minimal BI loss, and then they hire a claim preparer, and all of a sudden you get a 7-figure loss 4 months down the road. That actually is upsetting to the carrier, because like I said, managing reserves is important, but it's also that after that, you can't really go back and recreate the wheel. You're
Right.
going to get all this information, and something, it may or may not conform to the policy. So communication, as Monica said, and we've said and all of us have said, is crucial in any type of loss adjustment process.
And I'll
Yeah.
also add that, we could communicate and there might be a point of contact that we're communicating with, but if they don't communicate internally with the rest of the folks that are, as part of their team, they might come back and say, I haven't heard from you, and we've been communicating with that, one particular person. And so just making sure everyone's on the same page up front to say, let's have so-and-so talk on an ongoing basis, and that's the communication is great. But I think it's making sure that all parties understand the expectations from the beginning.
Yeah, I like to revise my earlier statement. I feel like I sound a little blasé about saying that you got to read the policy. That's one component of it, absolutely. And I think, yeah, to all of your points, communication, because when you start understanding a policy and you have questions about the policy, your broker or your insurance carriers are really here to answer your questions even before an incident does happen. So understanding the process, the claims process, and that's one of the reasons why we have this webinar, is so that our insurers have a better understanding of the process before a claim does happen. I mean, we hope a claim never does, but and to Dan's point, it might inevitably will, and knowing who to communicate with well beforehand, and understanding the conditions of the policy, and knowing who to talk to understand the conditions of your policy, like that's so key. So I think you all hit the nail on the head when it comes to just communication. Like we're definitely here to talk to our insureds and build that relationship, so that in the worst scenario, you'll have at least a pleasant experience in going through a claims process, if that's even possible. But that's the dream that I strive for. I mean, but if there's no other questions, I think we're at the top of the hour. I just want to thank everybody for joining. And I also want to thank Jessica, Dan, and Monica for participating on a discussion that I think doesn't get enough attention and really is a huge driver of loss. So I just want to thank you very much for being here today.
And if anybody has questions after the webinar is over, reach out to us. We're a resource here. We're trying to help everybody through a very difficult time if and when it does happen. So thank you very much. We appreciate your time. Thanks again, Perry. Thanks.
Thank you all.
Thank
All right.
you so much.
Have a great day. Bye-bye
Okay.
now.